Gold nears all-time high. Is this your last chance to buy before the surge? Imagine waking up tomorrow to headlines screaming, "Gold breaks all-time record." The price charts are vertical, the news anchors are breathless, and your friends are suddenly asking if you own any gold. Now picture yourself in that moment. Are you celebrating your foresight, or are you kicking yourself for missing out again? That's the FOMO moment investors dread, and it's exactly what's brewing in the gold market right now. Let's set the stage. Gold is hovering just below its all-time high, and the world is watching. But why now? Why is gold, a metal that's been around for thousands of years, suddenly the hottest ticket in town? The answer is a perfect storm of global uncertainty, economic shifts, and a series of events that have investors scrambling for safety. If you've ever wondered when the right time to buy gold is, you're not alone. The question on everyone's mind is this: is this your last chance before the next surge? To understand what's happening, let's rewind a bit. Over the past year, gold has been quietly building momentum. While tech stocks have grabbed headlines and cryptocurrencies have stolen the spotlight, gold has been the steady, reliable performer in the background. But now, with geopolitical tensions escalating, most recently after the world's largest LNG export facility in Qatar was shut down following an Iranian drone strike, investors are suddenly reminded of gold's timeless appeal as a safe haven. The impact of that single event was immediate and dramatic. European gas futures spiked as much as 54% in a single day before settling 39% higher. Oil, gas, gold, and silver all rallied for what analysts called obvious reasons: fear, uncertainty, and the search for stability. When the world feels unpredictable, gold shines brightest. Right now, the world feels more unpredictable than it has in years. But it's not just about geopolitics. There's a deeper, more structural story unfolding. Central banks around the world have been quietly accumulating gold at a record pace. In fact, last year saw the highest level of central bank gold buying in decades. Why? Because gold is the ultimate insurance policy. It's not tied to any one currency, government, or economy. When inflation bites, when currencies wobble, and when markets panic, gold stands firm. Let's talk numbers. The Reserve Bank of Australia, for example, has kept its cash rate at 4.35%, while other advanced economies peaked at an average of 5.7%. Now both are sitting at 3.85%. This divergence in monetary policy has had real consequences. Australia's inflation has been higher than it might have been, but unemployment is lower at 4.1% compared to a counterfactual 5.2%. The lesson is that central banks are making tough choices, and those choices ripple through every asset class, including gold. Meanwhile, the Australian dollar is holding its breath, barely moving as global markets churn. Housing approvals have slumped, with units down a staggering 25%. Mining stocks, once the darlings of the market, are being sold off as investors worry about global demand. In contrast, energy companies and banks are being snapped up, riding the wave of higher commodity prices and financial stability. So where does gold fit into all this? It's the anchor in a storm. When everything else feels risky, gold feels safe. That's why we're seeing a surge in demand, not just from central banks, but from everyday investors who want a piece of the action before it's too late. But here's the twist. While gold is near its all-time high, it's not just about price. It's about timing, psychology, and the fear of missing out. Every time gold approaches a record, there's a chorus of voices saying it's too late and the run is over. Yet time and again, gold has proven its doubters wrong. In 2008, during the global financial crisis, gold soared as investors fled to safety. In 2020, as the pandemic swept the globe, gold hit new highs. Now, with a new set of challenges, gold is once again knocking on the door of history. Let's pause and consider the psychology at play. FOMO, the fear of missing out, is a powerful force in markets. It's what drives people to buy at the top and sell at the bottom. But with gold, the story is different. Gold isn't a meme stock or a speculative crypto token. It's a store of value, a hedge against chaos, and a symbol of wealth that transcends borders and generations. So is this your last chance to buy before the surge? That's the million-dollar question. Some analysts say gold is overbought and that a pullback is inevitable. Others argue that the structural forces, including central bank buying, geopolitical risk, and inflation fears, are just getting started. The truth is that nobody knows for sure. But what we do know is that gold has a habit of surprising even the most seasoned investors. Let's look at the data. Over the past 50 years, gold has delivered an average annual return of around 8%. That's not flashy, but it's consistent. More importantly, gold's best years have come during periods of crisis, when stocks are crashing, when inflation is raging, and when currencies are collapsing. In those moments, gold isn't just an investment, it's a lifeline. Right now, the signals are flashing red. Inflation is stubbornly high in many countries. Central banks are walking a tightrope, trying to balance growth and stability. Geopolitical tensions are rising, with flashpoints from the Middle East to Eastern Europe. Through it all, gold is quietly inching higher day by day and week by week. But let's not forget the skeptics. There are always those who say gold is a relic, that it has no yield, and that it's just a shiny rock. Yes, gold doesn't pay dividends or interest, but what it does offer is something far more valuable: peace of mind. When everything else is falling apart, gold is the asset you can count on. So what should you do? The answer depends on your goals, your risk tolerance, and your view of the world. If you believe that the current wave of uncertainty is just the beginning, if you think inflation will remain stubborn, and if you worry about the stability of currencies and governments, then gold deserves a place in your portfolio. But don't just take my word for it. Look at what the world's smartest investors are doing. Ray Dalio, founder of Bridgewater Associates, has long advocated for holding gold as part of a diversified portfolio. Central banks from China to Russia are increasing their gold reserves.
Even tech billionaires are quietly buying gold, hedging against the unknown. The bottom line is this: gold is nearing its all-time high for a reason. The world is changing, and investors are looking for safety, stability, and certainty. Gold offers all three. The question is, will you act before the next surge, or will you watch from the sidelines as history repeats itself? Great! Let's continue with the next section. If you're still on the fence, let's dig deeper into what could happen next. The gold market is unique because it's driven by both emotion and logic. On one hand, there's the emotional pull of fear of war, fear of inflation, and fear of financial collapse. On the other hand, there's the cold, hard logic of supply and demand. Gold is finite. It can't be printed like money, and new discoveries are rare and expensive. Every ounce that's mined is harder to find than the last. That scarcity is part of what gives gold its enduring value. Now, consider the current global landscape. Central banks are signaling that interest rates may stay higher for longer, but inflation isn't going away quietly. In fact, in some countries, it's accelerating again. The cost of living is rising, wages aren't keeping up, and people are looking for ways to protect their purchasing power. That's where gold comes in. It's not just a hedge against inflation, it's a hedge against uncertainty itself. Contrast that with other assets. Stocks can be volatile, especially when earnings disappoint or global events spook investors. Bonds, once considered safe, have been hammered by rising rates. Real estate is facing headwinds from higher borrowing costs and falling approvals. Even cash, which feels safe, is losing value every day to inflation. In this environment, gold stands out as a rare constant. But let's be clear, gold isn't a get-rich-quick scheme. It's not going to double overnight, and it's not immune to corrections. There will be pullbacks and volatility. For those who understand its role, gold is about preservation, not speculation. It's about having an anchor in your portfolio when the seas get rough. So, how do you actually buy gold? There are more options than ever before. You can buy physical gold, such as bars, coins, or even jewelry. You can invest in gold ETFs, which track the price of gold without the need to store it yourself. You can buy shares in gold mining companies, which offer leverage to the gold price but come with their own risks. The key is to choose the method that fits your goals and comfort level. As gold flirts with its all-time high, the window of opportunity may be closing. History shows that when gold breaks out, it can move fast and far. The last time gold hit a new record, it surged over 30% in just a few months. Those who waited on the sidelines missed out not just on gains, but on the peace of mind that comes from knowing you're protected. In the end, the decision is yours. Remember that the best time to buy gold was yesterday. The second best time might just be today. Don't let FOMO be the reason you finally act. Let wisdom and preparation guide you instead. Because when the next surge comes, you'll want to be ready.